Is Bitcoin going through a consolidation pattern right now, and can we expect to see prices break out in either direction very soon? We're here to discuss this. Gold, inflation, and macro with Florian Grummes, Managing Director of Midas Touch Consulting. Florian has been on the show many times, has made a number of very important correct calls, including calling for Bitcoin to be the best performing asset last year and the year before. So he was right 2 years in a row. This year, he doesn't quite see the same story, and we'll be talking about that. Florian, welcome back to the show.
Thanks, David, for having me. Pleasure.
Pleasure is all mine. We spoke a few months ago in Dubai, of all places. This is the first time I've spoken to you since then, so I'm very happy to have you back and have a conversation with you. We're going to talk about Bitcoin, gold, and your macro thesis. First, I want to talk about macro with you. Inflation in the U.S. is a problem, to make an understatement. 7.5% headline CPI. It just doesn't seem to stop climbing. Your thesis about the crack-up boom has so far played out. Obviously, we haven't seen hyperinflation in the U.S. yet, but it's not a huge stretch of the imagination to now think 10% inflation could possibly be on the horizon, right?
Right, exactly. I mean, I think the crack-up boom is still running, basically stage by stage. I told you back then in our first interview that it will take years until this crack-up boom then ends in a kind of hyperinflationary scenario, because that's where all fiat money always went to in the end of the day. So inflation is always a monetary phenomenon. It's the money printing. This is happening all over the world. It's not only the US. It's now recently the People Bank of China joined the game again as well. It's happening in Europe. It's happening everywhere that the central bankers continue to expand the money supply, the balance sheets. And yeah, we're seeing it now, prices rising. I think nobody would now be willing to lower their prices. And if you, for example, are thinking about buying a car or buying a bed for your home or whatever, you would rather do it now than in a year, because you expect prices to continue to rise. And that's exactly the psychological effect in an inflation scenario. So you have, on the one hand, the central banks continuing to expand the money supply, and on the other hand, you have a shrinking confidence of the people in the money system, the fiat money system itself. And that's actually the two things that are needed for a crack-up boom. And I believe it's continuing. Yes, it's like kind of like a pressure cooker. Sometimes you have to get rid of the pressure and the hot air, and that actually happened over the last 2 months. But I think overall, in the bigger picture, this is just continuing, and you will see probably in the end of the day all markets rising higher.
Mm-hmm. Yeah, make all the important purchases now. Yeah, tell that to my credit card, Florian. But okay, let's talk back up. Let's talk about the crack-up boom. Can you define that theory?
Well, the crack-up boom, as I said, it's defined by, on the one hand, governments increasing, or central banks increasing the money supply, and on the other hand, people losing the confidence in the fiat money system, because they're seeing that prices are rising, that they can buy less and less with the money that they're making. And at some point, you will reach a certain a threshold, basically, where a critical mass has lost the confidence, and then it can happen actually very fast. The way to that threshold can take years, and I think we're on the way to it. I have no exact timing for that. We have to see how it plays out. I mean, you see like how many things happening. I mean, it's unbelievable how fast everything is unfolding now. I think you in Canada, 1.5 months ago, you would have not thought in what situation the country right now is in. So you see everything speeding up everywhere, and that's part of this crack-up boom. So it's an exponential age that we're living in every sense.
Okay. Well, the civil unrest in Canada is not a response to inflation, although inflation is a problem here in Canada. We're going to talk about that problem, and we'll come back to that. We'll come back to what's going on in Canada. But so what you're saying is the crack-up boom could potentially lead to civil unrest. Is that the next step?
Of course. I mean, that's always, in the end of the day, what's happening when the money system breaks down. And I mean, you have too many people that have either lost their job over the last 2 years, or their businesses went bankrupt. And as you just pointed out, your credit card is also not giving you a lot of limit anymore. So lots of people feeling a lot of pressure nowadays. And at some point, pain is too big. And then, yes, the mood has already changed. I think I think the outlook is not very good overall.
What is it going to take to get to double-digit inflation in the U.S.? That's just 2.5% away. I mean, it's still a substantial increase, but do we need to see anything substantial change, or are we already on the right track towards double-digit inflation, which is what we saw in the 1980s?
Yeah, the late 70s, early 1980s. I think we are on track to that. It's just a question of time. Can happen this year, maybe next year, if the Fed indeed starts to hike and starts to taper. I mean, you see already the markets gave a clear signal. So I don't think that they can do it aggressively at all, if they do it at all. And they probably will roll back rather quickly during the year, because end of the year we have midterm elections in the US. So at that point, they may need to make sure that at least a necessary majority of the people is more or less happy to vote for the current government.
Okay. All right. Let's talk about inflation hedging now. We were just chatting about this offline, you and I, about the situation in Canada. So just to recap for the audience, the Emergencies Act was invoked by the Trudeau government earlier this week, and that grants them certain powers during a national emergency. Some of these powers include seizure of financial assets and the freezing of bank accounts for suspected or people who they think are a threat to national security. And they're targeting protesters at the trucker convoy. And so some of these truckers, actually I read online yesterday, they've had their crypto exchange accounts frozen. So the RCMP, the Canadian police, have ordered Canadian crypto exchanges to halt transactions on certain wallets linked to protesters in Ottawa. Now, going back to your point, you were telling me, you were asking me, is there a bank run going on in Canada? You were reading about all these tweets going on. Rumors spreading. I haven't seen a bank run myself. I can tell you I live in Canada. I'm not personally going to the bank after this interview to withdraw my cash, so I don't think it's a big problem. Maybe some people are doing it, but I don't think it's a wide-scale problem. And certainly I think the Canadian banks are well capitalized enough to withstand any such a run for the foreseeable future. Who knows? Maybe they are, maybe they're not. But the Canadian banks are known to be pretty conservative. Yeah. Let's see what happens. Hopefully if it happens, I won't be destitute. But to your point about a bank run, suppose there is a bank run, just hypothetically, not just in Canada, anywhere. Maybe in where you're staying right now in the UAE, it doesn't matter where you are. If a run of the bank were to happen, what is the best place to put your cash? Is it just cash in the vault? Would you buy gold or other physical assets? Would you put some of it in Bitcoin and digital assets and digital wallets? What is the best place to run away from the government is basically my question.
Yeah, I think it's a mix of all what you just mentioned. So, of course, you want to have some gold safely stored in a vault or somewhere hidden. You want to have some, especially smaller silver coins, like 1 ounce silver coins, to be able to do maybe some grocery or barter deals. Maybe some people won't recognize your silver ounces. So for that case, it would also make sense to have cash, your local currency, definitely. And I would also recommend to have Bitcoin on a ledger, safely stored on a ledger, not on an exchange. So then the government cannot seize it. And why not having some Satoshis on your mobile wallet as well? So I think this is already pretty good diversification in such a scenario.
Yeah. I hope this doesn't get flagged by the government. Ways to circumvent the government. That's not what we're taking this. This is just ways to hedge inflation. Let's be clear. To be clear, we're just hedging inflation here. Okay, let's talk about Bitcoin. You made a call last year that Bitcoin would potentially see a crypto winter. I think that was what you said. Is that still happening? So far, it hasn't been great. The start of 2022 has not been kind to cryptos. What's next for us?
Yeah, I mean, in hindsight, I think we've spoken end of September, and I was quite aware of what was going on in China with the Evergrande story, and that has continued to unfold. But Bitcoin suddenly then showed some strengths again and actually even rallied to a new all-time high. And then we had this nasty pullback since mid of November, actually. And I think that the tech stock route also contributed to that. And of course, the internet and electricity shutdown in Kazakhstan early this year, also were a factor. And now we have seen Bitcoin bouncing from this 33,500 kind of range level. I think in the short term, there's a good chance that Bitcoin will continue to recover, probably 200-day moving average around 50K, maybe even a bit higher. I think many people started shorting Bitcoin, and they will have to cover at some point. But right now, I think we are somehow in a consolidation in the crypto sector. And what I told you last year was, if that happens, or once this happens, you probably will see gold catching up and getting a bit again. And actually, that's what's playing out right now.
Is Bitcoin responding negatively to Fed tightening or fears of interest rate hikes, you think?
I mean, what you can see is that the Bitcoin more and more starts trading together with all the other markets, right?
Yes.
So in the past, it didn't matter any news from the Fed or whatever market data you would have. Bitcoin didn't really care about it. Now you see that it does. So that means you have more and more institutional money in the sector, and it's trading together, especially with the tech stocks over the last 2-3 months, right? So I think it's not that uncorrelated anymore as it used to be. And you can obviously make the case that after this phenomenal rally over the last 14 years in the stock markets, they might be in for some more correction or deeper correction. But then again, coming back to the cracker boom, I don't think that these stock markets will crash anymore. I mean, you can have pullbacks 20-30%, of course, that's volatility. But like a complete implosion, I don't think is.
That's a key point.
Because again, if you need to basically put your money where you want to put it, I mean, stocks are a part of your diversification. So I don't think we're going to see a complete crash and implosion in the stock market. I think they will move higher with some dips and volatility, but might not be the best asset class, right? So if you compare stocks like the S&P 500 and against the commodity index, I'm definitely a commodity bull, and I think the commodities will outperform the stock markets over the coming years. There's these beautiful long-term charts where you can exactly see that we're probably at a very important pivot point where commodities will start to outperform the stock market.
Yeah.
But it doesn't mean that the stock market has to go down dramatically.
Okay. Well, that's a key point. So stocks are not going to implode, but that doesn't. What does that mean? There's a big range between rallying and implosion. I mean, is somewhere in the middle? Is it still going to correct?
Yeah, I mean, they can always pull back 10, 15, 20%, right?
Yeah.
People would freak out, and it is already enough. I mean, it's already enough what happened over the last 2 months, that most of the dump money is extremely pessimistic, while the smart money is getting very optimistic towards the stock market. So I think from a sentiment perspective, most of the correction has been done already in the stock market.
In the stock market.
But I don't think we're going to see returns like we've seen over the last 5 years.
As an investor, holding cash right now is rather dangerous, because if you let's assume that 7% inflation persists for, let's say, the next couple of years. I'm not saying it will, but let's just, for the sake of exercise, assume that it does. Over the course of several years, you're going to lose a large chunk of your wealth. It's not going to take very long. I can't remember. I read somewhere. I can't remember the math, but it will not take very many years to lose half your wealth, half your cash and value, if you compound 7% inflation every year. And so It's important to put your cash somewhere and not have a lot of cash holdings right now, for investors at least. So where would you go right now? Is it stocks? You've mentioned Bitcoin and gold for diversification purposes. What else, Florian?
No, I just said it. I mean, I think the whole commodity sector is super interesting. I've seen my commodity stock portfolio behaving very well over the last 2-3 months. It didn't went up a lot, like maybe 5 to 10%. But there was zero crash. It was very stable. It was actually a hedge against what happened in the stock market. And I think you still found a lot of great companies that pay nice dividends. I mean, the world will need so much commodities over the next 10 years for this whole electrification.
Yes.
So I think everything, copper, uranium, nickel, lithium, of course, the precious metals as well, some of the rare earth metals. I think this is all super interesting, and there's still a lot of undiscovered or undervalued stocks that you can pick up.
Florian, let's talk about gold then. You had mentioned to me last time in Dubai that gold could potentially beat Bitcoin this year. This is a change of sentiment from what you've said to me in the last 2 years. So let's recap this view. Why the change now?
Right. I mean, I think gold has done everything to disguise its true intentions. In hindsight, the flash crash in last August was actually the start of a multi-month uptrend. Okay, today we are trading more than $200 higher already. Mm-hmm. And gold has been correcting since August 2020. Over the last 16 months, it went into a triangle. And I think the last important low, mid of December, 1750. And since then, gold has been climbing higher. Yes, we had one sharp pullback in the third week of January, but since then, I think the low was 1780. But since then, you see, we are marching $120 higher now, breakout above this triangle. Gold is now bending its daily and the weekly Bollinger Bands to the upside. And I think we're going to 1975 over the next few weeks, maybe 1 to 3 months, maybe even with a short overshoot towards the round psychological number of $2,000. The monthly Bollinger Band is around 1975. So that's, for me, the logical target of this rally. Yes, in the short term, gold is overbought. So the risk reward maybe is not looking that good right now. But silver has not yet really started to run. Typically, silver is doing this always in the last stage of a rally in the sector. So I'm actually very optimistic for the next few weeks, maybe 1 to 3 months. And then we have to see how gold behaves once we get this typical pullback in spring.
Okay.
But very likely that gold continues to march higher here, yeah.
Once gold reaches $2,000, suppose it does, is that a bearish or bullish signal? Because one could interpret that as the start of a momentous move upward, the start of a bull rally, but also maybe it's 2,000, like you said, is a key psychological level. By that point, maybe it's overextended. What do you think?
Very likely it will be overextended if we reach this $2,000 level over the next few weeks or months, and then you probably get a deep pullback, and then it will take another few months until gold climbs higher again and tests this number again. So it will take more time, unless we have crazy things unfolding in the world, more geopolitical tensions,
yes,
or whatever have you, right?
Right.
I mean, the world is so unstable now that these things can happen all the time. So that's why you need to have your physical gold sitting in a vault, independently of what the price action actually is doing.
I like how you said that the price is going to go up, but it's not going to go up in a straight line. So I think that's a realistic assessment. Very few things actually do just move up a straight line. But actually, we saw gold do exactly that in August 2020. From May to August, there was a straight line upwards, and then it corrected. What's different this time? I'm just wondering why you think it's going to take a little bit more time, a little bit more volatility before it climbs to new all-time highs. The environment today, what's different today versus August 2020?
Well, you have to remember this time frame that you just described. I mean, that was basically the last quarter of 2 years of an ongoing rally in the precious metal sector. So gold started that rally at 1160 2 years before. And it's building up this momentum. And then you have this final stage when suddenly everybody becomes aware of this rally and the bullish sector, and everybody is storming into that sector, chasing it. And that's usually the latecomers. And then you see these sharp parabolic final rallies, and then the market is imploding. I mean, that's a pattern we see in all markets all the time. So you've seen this also in Bitcoin. You've seen this in the Nasdaq, what have you. I mean, this is normal, typical behavior. Unfortunately, it's the latecomers who pay the price then, right? And yes, that the smart money takes takes the position off in such a parabolic spike. So I think we are not there yet because, as I explained, the rally in gold started in August last year. So this is like 6 months. And I think we have much more room and time to go. But it's not a straight line, as you rightly said.
Yes. All right. Florian, well, I appreciate your insights. Best of luck with your work. I'll speak to you soon. Thank you for your analysis today.
Pleasure, as always. Thank you so much, David, for having me. All the best.
Thank you for coming on Kitco, and thank you for watching Kitco News. I'm David Lin. Stay tuned for more.